Hi there, my name is Randy Baker. I'm the Director of Finance for the Kendall Auto Group. I'm here today to talk to you about the advantages of leasing. Leasing's been around for a long time. Over the last couple of years, leasing has become more and more popular. And the biggest reason that is because our vehicles have become more and more expensive. Our car payments now are starting to look more like mortgage payments than car payments. So let's talk about the benefits of leasing versus buying. First of all, your monthly payments are typically a lot lower than they are on a purchase. Sometimes as much as $150 a month. There's less cash down out of your pocket. You get more vehicle for your money. You're under the factory warranty the entire time you're making payments. You have lower maintenance expenses. You get a new car every 2 to 3 years instead of every 6 to 7 years. You have no negative equity at the end of the lease, and you have a lot of options at the end of the lease term. In a lot of ways, I look at a lease as just another way to buy and drive a new car. I think you're going to be surprised how similar leases are to purchasing a car. Let's take a look at them side by side and take a look at the generic makeup between a lease and a purchase. So let's compare a 3-year lease to a 6-year purchase. On a lease, you have what's called a cap cost. Basically the same thing as a sale price on a purchase. If you have a trade-in, you've got a trade-in value on both a lease and a purchase. If you owe money on your trade, you've got a payoff, both lease and a purchase. Factory rebates, they apply to both leases and purchases. You have a lease term and you have a loan term, number of months that you're required to make your payments. On a lease, you have what's called a monthly rent charge, basically the same as an APR, annual percentage rate that's being charged on your contract on a purchase. Of course, you have a payment on both the lease and the purchase. On a lease, there's what's called a residual. That's a guaranteed, unpaid principal balance at the end of the lease. Basically what it takes to pay off the car. On a purchase, if you're on a 6-year contract and you call the bank up after 3 years, you ask them what the payoff is. Basically the same thing. So now we've talked about the benefits of leasing and the comparison between leasing and purchasing. So let's talk about what happens at the end of the lease. At the end of the lease, you've got lots of options. 1, you can give it back to the bank and walk away from it. 2, you can trade it in on your next vehicle. Or 3, you can buy it for the residual amount. I hope you found this information useful. And if you have any questions at all about our lease programs, just come visit one of our Kendall locations. We'll make it simple, fun, and easy. Thanks for your time.
Kendall. Let's start something great